Adjusting expenses. Adjusting prepaid expenses. Assume that on October 1st in period 1, a business purchased a 1-year insurance policy for $12,000. At that date, prepaid insurance is debit for $12,000 and cash is credit for the same amount. It is worth mentioning that prepaid insurance is an asset account, as the business owns the right to get the insurance service for a whole year. The insurance policy covers from October 1st in period 1 to September 30th of period 2. The business accounting period ends on December 31st. At that date, the business must capture all the expenses which are related to period 1. One of these expenses is insurance, as the company used the insurance service to generate revenue during this period. The amount of expense is $12,000 multiplied by 3 months divided by 12 months, which is equal to $3,000. To adjust that, insurance expense must increase by $3,000, and then the prepaid insurance as an asset must be decreased by such an amount. The prepaid insurance account balance is now $9,000, which represents the insurance service that is to be provided during the 9 months of the following period. Let's assume that the accountant recorded the initial entry when the policy is purchased by debiting insurance expense instead of prepaid insurance and credited cash. At year end, the insurance expense account has a balance of $12,000. But the business used only 1/4 of it, which is 3 months. So the expense is overstated in this case and we need to reduce it. An adjusting entry does this as follows. Decrease the expense by crediting it by $9,000 and increasing the asset prepaid insurance by the same amount to recognize that the business owned the right to get the insurance service for 9 months of the following period. Let's take another example. Assume that the business bought on April 1st supplies worth $1,000 from a vendor to use them throughout the period. At that date, the accountant recognized that by debiting supplies for $1,000 and crediting cash or accounts payable if the transaction is on credit. At the end of the period, on December 31st, the business had a physical count and found that $400 of supplies are left. This indicates that $600 of supplies were used to generate revenue. This means that there is $600 of supplies expense that should be recognized by debiting the supplies expense account. At the same time, we need to adjust the supplies balance to reflect the physical count. This is done by crediting the supplies account by $600. After posting, the supplies expense account's balance is debited by $600 and the supplies account shows a debit balance of $400. Depreciation is regarded also as an adjusting entry, as it adjusts the expense of the period. If the business bought a machine for $10,000 with a useful life of 5 years and a zero salvage value, its depreciation by the straight line method would be $2,000 per year. At the end of the first year, an adjusting entry is recorded by debiting the depreciation expense for the machine for $2,000 and crediting the accumulated depreciation for the same amount. Accrued expenses not recorded. If the business didn't pay an expense such as December's rent, at the end of the period the business needs to prepare an adjusting entry to recognize the rent expense, as the business used the rented space to generate revenue. An entry is recorded at the end of December to debit rent expense for $2,000 and credit a liability account, rent payable, as the business owes this money to the landlord. Later, in the following year, when the business pays the rent, rent payable, which is a liability, decreases by debiting it and crediting cash. Another example for salaries. If the company pays the salaries on a certain weekday which happens to fall in the following period. So let's assume that an amount of $4,500 is due in the current period and $1,500 is due in the following period. At the end of December, an entry is required to recognize the salaries expense for the current period by debiting salaries expense and crediting salaries payable for $4,500. Later, in the following period, when the business pays the salaries payable gets debit to reduce it by $4,500, salaries expense is debit for $1,500 to recognize the expense of the new period, and cash is paid for the whole amount, which is $6,000, which is the $4,500 plus the $1,500. Let's summarize adjusting entries for expenses. We have two types of adjusting entries for expenses. One is related to prepaid expenses, that is, expenses that are paid in advance, and accrued expenses, or expenses that are not recorded but have to be recognized. In case expenses are paid in advance, the accountant could originally have recorded them as prepaid expense or as an expense. If it is recorded as prepaid expense, which is an asset, the adjusting entry would be reducing the prepaid expense by the amount used. So, whatsoever expense is going to be debit, and the prepaid expense would be credit by such an amount. If the accountant recorded as an expense, so in such a case, the expense account should be reduced by the amount which is not used up. So, prepaid expense would be debit, and expense account would be credit by such an amount. On the other hand, if an expense is accrued, it should be recorded at the end of the period, so the expense account is debit and the liability account, usually an expense payable, is credited by the amount used.